Question number 1. Which financial statement reports the revenues and expenses for a period of time, such as a year or a month? Option A, balance sheet. Option B, income statement. Option C, statement of cash flows. So the right answer is option B, income statement. Balance sheet reports assets, liabilities, and stockholders' equity, whereas statement of cash flows is a financial statement which explains how a company's cash balance changed during the accounting period. Question number 2. Under the accrual basis of accounting, revenues are reported in the accounting period when which of the following occurs? Option A, cash is received. Option B, cash is paid. Option C, service or goods have been delivered. So the right answer is option C, service or goods have been delivered. A method of accounting that recognizes revenues and expenses at the time cash is received or paid out is called cash basis of accounting. Question number 3. Resources owned by a company, such as cash, accounts receivable, vehicles, are reported on the balance sheet and are referred to as option A, assets, option B, liabilities, option C, expense. So the right answer is option A, assets. An asset is a resource with economic value that an individual, corporation, or country owns or controls with the expectation that it will provide a future benefit. Question number 4. Unearned revenues is what type of account? Option A, assets. Option B, liability. Option C, owner's equity or capital. So the right answer is option B, liability. Because the company that is to perform the service or is to deliver the product has received the cash in advance and therefore has an obligation, liability, to deliver the service or the product. Question number 5. Assets are usually reported on the balance sheet at which amount? Option A, cost. B, current market value. Option C, expected selling price. So the right answer is option A, cost amount. This is true because of the cost principle. It is also known as the historical cost principle. The cost principle requires that assets be recorded at the cash amount, or the equivalent, at the time that an asset is acquired. Further, the amount recorded will not be increased for inflation or improvements in market value. Question number 6. Accounting entries involve a minimum of how many accounts? Option A, 1 account. B, 2 accounts. Option C, 3 accounts. So the right answer is option B, 2 accounts. Because of the double entry system, every transaction will affect at least 2 accounts. Question number 7. Which term is associated with left or left side? Option A, debit. B, credit. Option C, both. So the right answer is option A, debit. Question number 8. What will usually cause an asset account to increase? Option A, debit. B, credit. Option C, none. So the right answer is option A, debit. Question number 9. Which of the following will cause owner's equity to increase? Option A, expenses. B, owner's draws. Option C, revenue. So the right answer is option C, revenue. Revenues will cause owner's equity to increase. Question number 10. Which of the following will cause owner's equity to decrease? Option A, net income. B, net loss. Option C, revenue. So the right answer is option B, net loss. A net loss will cause owner's equity to decrease. Question number 11. The financial statement with a structure that is similar to the accounting equation is option A, the balance sheet. B, income statement. Option C, statement of cash flows. So the right answer is option A, the balance sheet. Question number 12. A corporation's net income is eventually recorded in the following stockholders' equity account. Option A, dividend. B, capital reserves. Option C, retained earnings. So the right answer is option C, retained earnings. Question number 13. The basic accounting equation is assets is equal to liabilities plus Option A, income. B, expense. Option C, equity. So the right answer is option C, equity. Question number 14. The owner invests personal cash in the business. Show the effects of the transaction on accounting equation. When the owner invests personal cash in the business, it increases the assets of the business, specifically cash. Simultaneously, the owner's equity also increases, reflecting the owner's increased claim on the assets of the business. Question number 15. The owner withdraws cash from the business for personal use. Show the effects of the transaction on accounting equation. When the owner withdraws cash from the business for personal use, it reduces the company's assets, specifically cash holdings. Simultaneously, it diminishes the owner's equity, reflecting their decreased claim on the company's assets. Question number 16. The company receives cash from a bank loan. Show the effects of the transaction on accounting equation. When the company receives cash from a bank loan, it increases the asset side of the equation, specifically cash. It also creates a liability in the form of the bank loan. So, assets, cash, increase, while liabilities, bank loan, increase as well. Question number 17. The company purchases equipment with its cash. Show the effects of the transaction on accounting equation. The purchase of equipment with cash reduces the company's cash holdings, an asset, while increasing the value of equipment owned, another asset. There's usually no direct impact on liabilities or owner's equity unless the purchase is financed through external means. Question number 18. The company repays the bank that had lent money to the company. The repayment of the bank loan decreases both assets, cash, and liabilities, bank loan, without directly affecting owner's equity. Question number 19. The owner contributes his/her personal truck to the business. The owner's contribution of their personal truck increases both assets, truck, and owner's equity without directly affecting liabilities. Question number 20. The company purchases a significant amount of supplies on credit. The company's assets increase as it acquires supplies, representing inventory or materials that can be used in its operations. However, since the purchase is made on credit, increases liabilities, accounts payable. Question number 21. The company purchases land by paying half in cash and signing a note payable for the other half. The company's asset side of the equation increases as it acquires land, with half paid in cash, reducing cash holdings, and the other half represented by a note payable, increasing long-term liabilities. Question number 22. The two main methods of bookkeeping and accounting are: number 1 is the cash method, and the second method is the accrual method of accounting. The two main methods of bookkeeping and accounting are the cash method, which records transactions when cash is exchanged, and the accrual method, which recognizes transactions when they occur, regardless of cash flow timing. Question number 23. The book of original entry is the definition of option A, journal, B, ledger, option C, trial balance. So the right answer is option A, journal. Journal is called the book of original entry because the transactions are initially recorded in chronological order before being transferred to the ledger accounts. Question number 24. Assets and stockholders' equity accounts are known as balance sheet accounts. Option A, expenses, B, income. Option C, liabilities. So the right answer is option C, liabilities, because they represent the fundamental elements used to assess a company's financial position at a specific point in time. They collectively show what a company owns, owes, and what belongs to its owners. Question number 25. What is the term used to describe the financial document that details the variance between a company's cash account balance and its bank statement balance? The term used is bank reconciliation statement, which outlines the differences between a company's cash account balance and its bank statement balance.